Hey folks, welcome to a product review at Finominal. Today we're going to look at Colombia's Adaptive Risk Allocation Fund, which trades on the ticker CRAZX or CRAZX. Now, Colombia's approach is basically a risk-based asset allocation strategy where they allocate to diverse asset classes across the globe and try to generate attractive risk-adjusted returns, i.e. a high Sharpe ratio. The fund manages close to $2.5 billion, and this share class charges around 76 basis points. So let's investigate in terms of what makes this fund successful. And we're going to kick off with a benchmarking analysis. Now, our kind of auto-suggested benchmark is the global 40-60 portfolio, which means 40% allocation to global equities and 60% allocation to US investment grade bonds. Now, we have a track record of CRAZX, right, since 2012. And we do see roughly that this portfolio this fund exhibited the same trends as this benchmark index, but it underperformed. And now that's, of course, from a return perspective. And the goal of Colombia's product is to achieve higher risk-adjusted returns. So we can also look at the Sharpe ratio, where CRAZX generated 0.44 over the last 13 years, compared to 0.54 for the kind of like passive benchmark portfolio. Now, let's move on in terms of what we can learn about like how Colombia allocated across time. And here we have a returns-based factor exposure analysis where we do see the factor betas to the kind of the major asset classes across time. Now we do see that there's been consistent positive exposure to the S&P 500, right? That beta is consistently positive. We do see the exposure to bonds was also consistently positive, or more or less, but it kind of like shifted around. There's hardly any allocation to commodities. And the beta to the US dollar index was close to zero, which simply indicates that there was very little international exposure. Now, for a fund that has the flexibility to invest globally across asset classes, this doesn't look particularly exciting, right? It's just US equities and bonds, right? And that's kind of like interesting to look at it from that perspective. If you want to change your perspective to resources, we do see that, well, there have been changes in allocations across the years, right? But most of the risk is explained either by the US stock market or US bonds, right? Now, that's from a resource perspective. Let's move on to risk and see if kind of Colombia's risk-based asset allocation framework has actually allowed them to do better in times of market stress. Now here we can see the drawdowns across time, right, since 2013. So we have a bit more than a decade. But unfortunately, we see that, well, in almost all crisis periods, CRAZX generated larger drawdowns than that benchmark portfolio, except over here in 2022. But the fund also recovered slower, right? It had kind of like double dip over here. So from a risk perspective, this product is not more attractive than the simple 40-60 portfolio. Now, we can also think about, can we simplify this portfolio or replicate it? And the short answer is yes, right? Because effectively, a simple portfolio, right, which is effectively that passive benchmark that we have already here. So a simple portfolio of 40% allocation to the ACWI via an iShares product and AGG, again via an iShares product, right, where we allocate 60%. That replicates performance. It gives you actually like I think a higher return, right? So 5.47 versus 508. You get a higher Sharpe ratio, 0.54. And you pay only 15 basis points versus 76. And that kind of already summarizes our short review of Colombia's adaptive risk allocation fund. Unfortunately, there is not much more to it. As you can see, it hasn't managed to outperform a simple benchmark, right, comprised of global equities and US bonds. There doesn't seem to be anything unique going on, right? And unfortunately, it's not worth paying 76 basis points for it, especially given that you can replicate this product for 15 basis points as we're showing here. Hope that helps. Have a nice day.